1. Taco trade backfires. Trump uses stock highs to push new tariffs. Wall Street warning. 2. Trump's tariff salvo. How will markets react? 3. The taco trade. Will Trump's trade policies backfire on investors? 1. Taco trade backfires. Trump uses stock highs to push new tariffs. Wall Street warning. The taco trade, a Wall Street dilemma. The taco trade is turning into a significant challenge for Wall Street as President Trump capitalizes on the recent peaks in the stock market to push forward with his tariff agenda. Initially, Wall Street believed it had a solid grasp on President Trump's approach to the trade war, but recent developments have sparked doubts among investors. The markets had largely downplayed the risks associated with tariffs, operating under the assumption that Trump would revert to his previous behavior of backing down. This mindset gave rise to what has been dubbed the taco trade, a term that reflects the belief that Trump would ultimately retreat from his aggressive stance. This confidence allowed stock prices to soar to unprecedented heights, marking a remarkable recovery from the downturn caused by his Liberation Day tariffs implemented in April. However, Trump has taken advantage of these stock market highs to reinforce his commitment to imposing stringent tariff rates. In a recent interview with NBC News, he stated, "I think the tariffs have been very well received." The stock market hit a new high today. He has also proposed a baseline tariff rate of 15% to 20%, which is significantly higher than the current uniform rate of 10%. Throughout the week, Trump has been sending letters to U.S. trading partners, outlining the tariff rates they will face by August 1st if no trade agreements are reached. On Saturday, he issued a warning to the European Union and Mexico, threatening them with tariffs as high as 30%. While many view these letters as mere negotiating tactics, the stock market has begun to retract from its all-time highs as skepticism about the taco trade starts to surface. Capital Economics noted, markets appear to believe that Trump will again back down. We are not so sure. Interestingly, Trump did not reinstate his reciprocal tariffs on Wednesday, when a 90-day pause was set to end. However, his new deadline of August 1st only provides a limited window for negotiating trade deals that could prevent the steep tariffs outlined in his letters. In addition to these broad tariffs, Trump is also moving forward with sector-specific duties, announcing a staggering 50% tariff on copper and warning that imported pharmaceuticals could face a 200% tariff. Currently, the stock market is not experiencing a repeat of the dramatic decline seen in April, when the S&P 500 plummeted nearly 20% from its previous high, edging dangerously close to a bear market. This relatively subdued response is likely attributed to the taco trade. However, this situation creates a precarious cycle. Capital Economics pointed out that the primary reason Trump initially had to abandon his Liberation Day plans was due to the sell-off in both the equity and treasury markets. Without that pressure, Trump may feel emboldened to follow through with his plans this time, especially since tariffs have, so far, had minimal impact on consumer goods prices, and fears of a recession have not materialized. JPMorgan CEO Jamie Dimon has also cautioned that investors seem to be growing complacent regarding the risks posed by Trump's tariffs. Similarly, UBS has highlighted the paradox between the taco trade and Trump's actions. Economists at Bank of America have pointed out the market's failure to resist Trump's new tariff initiatives, labeling it as the game that never ends. As stocks continue to overlook the latest market shocks, consumer confidence is less likely to be shaken. However, this also means that the Trump administration has more motivation to escalate tensions, as the cost of doing so appears low. The pressing question now is how much re-escalation the market can tolerate before it corrects downward, and how much discomfort Trump is willing to endure before he opts for de-escalation, as he did in April. In essence, the dynamic between Trump and Wall Street is subject to multiple equilibria. In simpler terms, it seems that Trump and Wall Street may find themselves in a continuous loop of negotiation and tension. Introducing the 2025 Fortune 500. Explore this year's definitive ranking of the largest companies in America. Explore the list here. https://fortune.com/ranking/fortune 500/?IDM_source =IDM_medium=article_tout IDM_campaign=plea_text. 2. Trump's tariff salvo. How will markets react? Markets brace for impact. Trump's bold 30% tariff move threatens to shatter investor complacency. As trading desks prepare for Monday's opening bell, global markets face their most consequential stress test in months. President Trump's weekend declaration of 30% tariffs targeting the European Union and Mexico, effective August 1st, throws gasoline on smoldering trade tensions. But here's where investors might be dangerously optimistic. Despite escalating measures against nations from Canada to Algeria, market behavior suggests traders still expect another Trump administration U-turn. This isn't just about steel and aluminum anymore. The administration's latest salvo expands the battlefield, with White House officials framing these tariffs as leverage for renegotiating multiple trade relationships simultaneously. While seasoned observers like JPMorgan CEO Jamie Dimon have repeatedly warned against downplaying trade war risks, many investors appear to be banking on historical patterns, remembering how previous tariff threats were walked back after market turbulence. Here's the critical nuance most headlines miss. This escalation comes at a fundamentally different moment. With midterm elections approaching and NAFTA negotiations in flux, the political calculus for compromise has shifted dramatically. When the White House promises more tariffs coming for everyone, it's not just economic policy, it's geopolitical theater with real consequences for supply chains and inflation. Controversy alert. Could Wall Street's apparent indifference actually encourage more aggressive trade moves? Some analysts argue that muted market reactions embolden hardline negotiators, creating a dangerous feedback loop. Others maintain that Trump's pattern of maximalist demands followed by deal-making remains intact. As you watch market reactions this week, ask yourself, are we witnessing the normalization of trade warfare as a negotiation tactic, or the early stages of a genuine global economic rupture? Share your take below. Do you think investors are underestimating the risks, or correctly anticipating another 11th-hour deal? 3. The taco trade. Will Trump's trade policies backfire on investors? The taco trade, a potential pitfall for investors. The stock market's taco trade, which stands for Trump always chickens out, might be on the verge of turning against optimistic investors. As we navigate through the complexities of trade policies, it's crucial to understand the implications of this strategy. Asterisk investors have increasingly perceived President Trump's more radical trade policies as mere bluffs. Asterisk, however, without the stabilizing influence of financial markets to hold Trump accountable, could this trade strategy ultimately backfire? Asterisk Ben Inker from GMO warns that a lackluster response to tariffs could actually encourage Trump to escalate his trade tactics. This year, buying the dip during the fluctuations caused by tariffs has proven to be a lucrative approach. Yet, the question remains, will the taco trade backfire on those bullish investors who believe that the president will always retreat from his aggressive stances? It didn't take long for savvy investors to realize that Trump's statements regarding trade policy often lack sincerity. The term taco trade was popularized by Robert Armstrong of the Financial Times, highlighting Trump's tendency to retract proposals that disrupt the markets. As a result, many investors have begun to dismiss Trump's more extreme policy suggestions, such as imposing blanket tariffs or even dismissing the chairman of the Federal Reserve, as mere bluster. However, Ben Inker, who co-leads asset allocation at GMO, cautions that this mindset could lead to significant repercussions. Throughout this year, the markets have served as a crucial check on Trump's actions. For instance, he paused tariffs in April following unprecedented sell-offs in both the stock and bond markets. Additionally, he reconsidered his idea of firing Jerome Powell as Fed chair after the markets reacted negatively to that possibility. Currently, with investors appearing less inclined to sell off their holdings after each bold announcement from Trump, he may feel less compelled to retreat from his trade war. This week, he intensified his rhetoric, sending letters that threatened 25% tariffs on Japan and South Korea, 50% tariffs on Brazil, and 35% on Canada. On Friday, stocks experienced a decline as Trump escalated the trade conflict, but the drop was nowhere near the magnitude of the sell-off in April, even though some of the newly announced tariffs were steeper than anticipated. Inker remarked, "What we're witnessing today is a much more aggressive Trump." He elaborated that the announcement of 50% tariffs on Brazil represents a bold stance that suggests he believes he can act without restraint. This is a stark contrast to the previous retreat from the Liberation Day tariffs when the bond market reacted strongly. He further stated, without the financial markets signaling him to back off, he is unlikely to do so. Recently, investors have not been adequately factoring in potential risks. The S&P 500 and NASDAQ reached record highs on Thursday, and overall valuations are elevated. Inker estimates that the benchmark index is likely around 40% overvalued. The U.S. stock market appears quite pricey. While it may not be as inflated as it was in 2000, it is still expensive compared to nearly any other historical period, Inker noted. Moreover, its valuation relative to the rest of the world is at an all-time high. Currently, Inker suggests that the most promising investment opportunities lie in deep value stocks and developed market stocks outside of the United States. What do you think? Is the taco trade a sound strategy, or are investors setting themselves up for disappointment? Share your thoughts in the comments below. Asterisk investing. Tariffs. Trade war. More. Trump tariffs. Read next.